You are welcome to my channel. This is Kevin Davis Accounting. So we are still continuing with our series on partnerships, and today I want us to look at a number on partnerships. Now, before I do that, please, I would like to urge you to subscribe to my channel. Subscribe to my channel, refer to your friends so that they can have also a benefit. Let them get to know there's free learning taking place here at Kevin Davis Accounting, so that we can grow and become successful together. So this is the question. It says, James and Jonah are in a partnership running a garage business. Included in their partnership deed are the following terms. Profits and losses are to be shared in the ratio of 6:4 to James and Jonah respectively. Interest on capital is allowed at 5% per annum. Jonah, acting as an administrative manager, is entitled to annual salary of 10,000 Ghana shillings. On 1st January 2018, their capital and current account had the following balances. So we have James' capital account was 72,000, current account was 7,000. Jonah, capital account was 40,000, current account was 4,000. Then they're saying, by mutual agreement, in the middle of the year, Jonah increased his capital by paying a further 6,000 into the partnership account. The partners' drawings and interest charged on drawings during the year were: James' drawings were 20,000, interest on drawings was 2,000. Jonah, drawings were 10,000, interest on drawings was 1,000. Then they are saying the trading profit of the garage business for the year ended 31st December 2018 was 50,000. Required: prepare I profit and loss appropriation accounts, II partners capital accounts, III partners current accounts. So that's the question that we are going to solve together here, and I believe by the end of this question at least we would have moved a bit to understanding, because it's a series, so we are going step by step. So let us start. So we're going to start with our workings. And so working one, we are going to look at interest on capital. So if you look back through in the question, they are telling us that, let us start with James. So James, the interest on capital is 5/100 times. Now, when you go back to the question, you realize that the balance brought forward in the capital account for James is actually 72,000. So when you do the mathematics here, you actually get 3,600. So that's for James. Then when it comes to Jonah, now they are saying that for Jonah it is 40,000, but then they are saying that in the middle of the year, that means that is 6 months, he added up another capital, meaning we are going to do like this. Jonah is 5 over times the 40, because this was there for those months. So he has to get the amount or the interest on this amount of money, because this is the amount of money that was there from January maybe to June. So we shall say times, that's it. Then we come back and say times the 6,000, then times 6/12 to cater for those for this 6,000 for the next 6 months. So when we calculate this, actually this we shall get 1,000 and shall have 150 here, giving us a total of 1,150 for Jonah, and this one is for James. So we are done with this. So next, we are lucky that our interest on drawings was given to us. Otherwise, we would have also calculated it if it was a percentage. If it was a percentage, we would be calculating our interest on drawings. So we get the percentage, we multiply it by the amount of drawings that these people took from the business. But we are lucky enough that this time they calculated them for us, so they gave us a figure. So that means we can actually start and we do our profit and loss appropriation account. So we shall say James and Jonah profit and loss appropriation account. So we shall have our Ugandan shillings here and our Ugandan shillings here. Therefore, we shall start with our net profit. So when you go back to the question, actually they are telling us that the trading profit of the garage business for their end 31st December 2018 was 50,000. So you come here and say profit was 50,000. Then from this we add our interest on drawings. Now, our interest on drawings, when you check through a question, you realize that for James, it was 2,000. Then for Jonah, it was 1,000. So they give us a total of 3,000. So when we add this plus this, we shall actually have 53,000. So that's the amount of money that we have. Then, of course, we shall less our interest on capital. Now, the interest on capital is the one that we calculated first. So we come here and say James. So for James, it was 3,600. For Jonah, it was 1,150 shillings. So that's what we have. Then they told us something. If you go back into the question, they said, Jonah, acting as an administrative manager, is entitled to annual salary of 10,000. So we can then say partner's salary, partners, and of course we have Jonah, which was 10,000. So we get the total of this, and so when you get the total of this, you realize that our total will be 14,750. So we shall subtract this off, and our final value will be 38,250. And this is what we shall call our residual profit, or profit to be shared. So this is our residual profit that we have. Now, when you go back in the question, they told us that profits and losses are to be shared in the ratio of 6 to 4 to James and Jonah. That means 6 to 4, it will be James, 6 over 10, then we multiply. I hope we know how we come up 6 over 10. Remember, the ratio is 6 to 4. So that means when we are finding how much this person got, we shall have 6 out of the actual 10, because 6 plus 4 is 10. That means it was out of 10, but out of 10, this person actually has 6. So out of 10, this person has 4. So this is how we are going. That's why we are coming up with a 6 out of 10. So we say 6 out of 10 times 38,250 for James, and we shall actually get for James we shall have 22950. This is the amount we have for James. Then when it comes to Jonah, we shall have 4 over 10 times 38,250. That's what we have, and we shall have 15,300. So when we add this together, we shall actually get 38,250. So that is all about the profit and loss appropriation account. So this is the amount of money James received, and this is the amount of money Jonah received. Now we are done with the appropriation account. Now next, they told us in the question that we prepare the partners capital accounts. Now partners capital accounts, So shall say James and Jonah capital accounts. And so shall so we shall have James and Jonah, James and Jonah. So this is what we have. So let's go back to the question. So they were saying that, remember why we were having balance brought forward under the capital accounts. So we shall come here and say balance brought forward. So for James, if you check through the question, it was 72,000. Then for Jonah, when you check through the question again, it was 40,000. Remember, of course, we are using the fixed capital account. Then there's something they added here. They say that by mutual agreement, in the middle of the year, Jonah increased his capital by paying a further 6,000 into the partnership account. So we shall call this additional cash and shall call it 6,000. So that's all we have here. That's all we have here. So we are going to balance off our account. So our capital account is done. There's nothing much that goes into the capital account. Most of the work actually is done in the current account. So we close off this. So this is 72,000 and this is 46,000. So this side as well shall have 72,000 and we shall have 46,000. Therefore, our balance carried down will be 72,000 and here we shall have 46,000. And then our balance brought down will be 72,000 and then 46,000. And we are done with our capital accounts. It is very, very easy. Very, very easy. So this is how the capital account is supposed to be done. Then next we are going to cover the current account. We are going to look at the current account. So let us look at the current account. So we are back and we're going to look at James and Jonah current accounts. It is still the same format as the capital accounts, just that here we're going to do much of the work here. So let's go back to the question. So you're telling us about the balance brought forward. And so we have balance brought forward. If you look in the question, James had 7,000 and then Jonah had 4,000. So that's the balance brought forward that we had. Then we are going to bring our interest on capital, the one that we calculated up there. So we shall say interest on capital and the one we got for James was 3,600 and for Jonah was 1,150. So that's our interest on capital. Then secondly, we are going to have the share of profits. Remember, this part has shared profits, so we bring here our share of profits. How much did James get? James got 2,950 and then Jonah received 15,300. That's it. Then we are supposed to add the partner's salary, a partner's salary of 10,000. So we come here and say partner's salary was worth 10,000. So that's the amount that we have as a partner's salary. Then we continue. we continue. It says, if you look through the question still, we have drawings now. We come and show that drawings. Now the drawings we actually had 20,000 for James, and we also had 10,000. We had 10,000 for Jonah. So those are the amount of drawings that we had. Then we bring our interest on drawings. Our interest on drawings, if we take through the question, I realize that for Jonah it was 2,000, and for James it was 2,000, and for Jonah it was 1,000. So what is left is to actually balance off our So what's left is actually to balance off our accounts. So we shall balance them off like this. And then you realize that of course this side has to be heavier, and so when you add up here you shall have 550, and then here we shall have 30450. It's the amount of money we have here. So it is heavier than this side still. We shall bring it here as 550 and 30450. So our balance carried down, we shall have 11550, and here we shall have 19,450. And the same will apply this side as our balance carried down, and we shall have 11550, and then we shall have 19,450. So this is what we have, and this is how our current accounts are done. So ladies and gentlemen, this is how our current accounts are done. Now let me show you something here. In case they told us to extract, I'm going to make an extract because this was not a full question. It was just to show you how it is done and how our current accounts are derived. Now let me show you. In case they told you to make a financial position, statement of financial position. Since we didn't have our assets here, what we would have done, would have said our assets. Then we leave here our total assets. Since we don't have them, we shall just fix them here. Then we come under owner's equity. And therefore, we shall say under our owner's equity, we shall have our capital. So we shall have our capital account. And then we shall have James and Jonah. Therefore, we go back and say, for James, of course, it was 72,000, and this was 46,000. When we add this, the total of this, actually we shall get 118,000 as a total. Then we also come here with our current account. So see, we have James and Jonah. So remember, for James it was we check out for James it was 11550. Then for Jonah it was 19,450. So when we add up these together, actually we shall have 31,000. 31,000. So 149,000. So that means even our total assets here will be 149,000, since we don't have our total assets. So this is how it would have been if we were to make a statement of financial position. We shall do a number and we shall solve all this at once as we go on. So we are still in introduction. We are going step by step and it's a series, so we shall keep building on that as we go on. So thank you so much for watching. This is Kevin Davis Accounting. Subscribe the channel, share to your friends, and they also have a benefit. Until we meet again, it's a bye for now.